In this video, we need to prepare for catalysts that are coming this week. I'm also briefly going to talk to you about things like the minutes and PPI numbers that came out, but most importantly, we're going to talk about CPI and then retail sales. We got to get ready for these numbers. They're a big deal, so let's get started. First catalyst this week actually just came out. It's the PPI figures. The PPI figure was for this is a producer price index, right? So this measures prices from the seller's point of view. And we were expecting the final demand to decline to a level of 0.2%. That was the surveyed expectation. That actually came in at 0.4%, which is 4.8% annualized. Not great. Some weakness there. Then we've got the core PPI, which also came in higher than expected. Final year over year was expected to drop from 8.7 to 8.4, actually came in at 8.5. So literally across the board, worse producer price inflation numbers. And I think that sets up a little bit of what to expect for tomorrow. CPI data comes out tomorrow morning at 5:30 a.m. Pacific time. That's 8:30 a.m. Eastern time. I will be covering CPI inflation live. I encourage you to come. And if you want to click the little reminder button or to get a reminder from YouTube, go to metkevin.com/links. There you're going to see 2 live streams coming up. One for the Fed Reserve minutes, which I think are actually a lot less important, but those come out at 11 a.m. today, so I'll be streaming those live. And the second is the link that you're going to see for CPI, and that's tomorrow at 5:30. That's going to be critical. I mean, JP Morgan is estimating the market could drop as much as 5%, literally tomorrow. That is, the S&P 500 could drop as much as 5% if we get PPI numbers, or I should say CPI numbers, like the PPI numbers, where not only do we not see the trend of inflation going down, but if anything, it's solidifying, broadening out, and going up. That's going to be devastating to markets, and I think that's why markets today are kind of like, ah, gosh, these PPI numbers weren't great. What is this saying about tomorrow? Now, regarding CPI expectations, we're expecting the month-over-month CPI inflation report to come in at 0.2%. Look, if the CPI numbers come in at expectations, I don't think the market's gonna be happy. Like, the market doesn't want at expectations. The market certainly doesn't want worse than expectations. That's gonna be terrible. If we get worse than expectations, the market's just gonna tank. If we get at expectations, okay, fine. Maybe things will be stable. But the expectations aren't that great, and if anything, they're kind of, in my opinion, skewed to a fall in inflation, but they're still not that great. So meeting these expectations isn't great. It's like, you know, winning a foot race when they've already given you, you know, a half-mile head start, and you've only got to go another half mile, and everybody else got to go a mile. The point is, like, even if you win, you're still a loser. Okay? The core inflation expectation is expected to be 0.4%. I wouldn't be surprised to see these numbers come in hot. I mean, core inflation, you know, if we strip out food and energy, 0.4%, that's terrible because that's 4.8% year over year. That's way higher than the 2% inflation target that the Fed has. And it shows you, again, probably a broadening of inflation. And it's just going to freak the Fed out. Year over year, we expect CPI to come in at 8.1 headline, down from 8.3, so still not breaking that 8%. I mean, for us to really have like a green rally and solidify a bottom here, I mean, work backwards. Imagine inflation tomorrow comes in at 5% year over year and, you know, negative 0.3% month over month. Well, the market's going to rally. The market's going to freak out like, oh my gosh, this is it. We've hit peak inflation. And if we got another report next month that reiterated like super low inflation and a negative month over month again, the market's going to rally. That's it. The bottom will be in and the pain will be over. But these expectations, even if we meet them, it's not that great. You still have 8.1% inflation. You still have 4.8% annualized core inflation and broadening of inflation. It's still not that great. So the expectations just suck for CPI. Now, the expectations are often wrong. I just hope they're not wrong to the upside. So if they're wrong to the upside, we're gonna have hell to pay tomorrow. And it, you know, like what we saw in the September inflation report, you could see the JP Morgan assumption come true that we end up having another 5% day to the downside. Terrible. Now, again, if we could get, in my opinion, let me do this, okay? Here's the way you do this. We have to look at the expectations based on the economists and look at the range. So the range for this survey is very important because if you get a miss to the downside where no economist was expecting it, could be good. Most of the economists surveyed here, 43 of them, are sitting around 8.1. It's kind of like a bell curve. Nobody is expecting it to come in at 7.8. So if you got a 7.8 headline, that would be very bullish. That would be extremely bullish. Because all of the economists would have been wrong, they would have assumed that things were going to be worse when they actually ended up being better. Now, if we go for, let's do that same thing, but let's do it for core. So if we do CPI excluding food and energy month over month, the survey is that we're going to get a 0.4 median estimate, 0.4% report. Nobody is expecting it to come in less than 2.5%. So, or I should say 0.25%. So if we get something on a month over month basis that's less than a quarter, that'd be good. You know, like if we could get a 0, if we got a 7.8 and a 0, rally mode. I'm not optimistic. I'm really not optimistic, but I'm hopeful. But hope is not an investing strategy. Now, again, we're going to have the Fed minutes, but again, those are going to be looking back to September, where I'm almost certain we're just going to have a Fed that's talking about a broadening out of inflationary pressures and how they have to do everything in their power to control inflation. I'm not really expecting anything crazy new from these minutes, unless they give us any kind of insights into the economy beginning to weaken, potentially the housing market or the jobs market. Those are actually going to be critical notes, so we will look for those. But in terms of inflation, I'm not really expecting any big hints from the minutes. I'm expecting more insight on that tomorrow. Now, on Friday, we have two really big things happening. Number one is the final expiration of that coupon code link down below. Lifetime access will be going away for anybody who buys the programs after Friday, specifically the Path to Wealth course, because we've got a massive transformation coming to that. So if you want to lock in lifetime access, make sure you join before Friday at 11:59 p.m. We've got a big release coming up. And we're finally going to be coordinating with Shopify on some of this, so it's going to be really interesting. Anyway, the second thing that happens on Friday is we actually get retail sales numbers. Now, this could be good or it could be bad. So last month, retail sales numbers actually, I mean, that's like redundant. Anyway, last month, retail sales data came in with a month-over-month excluding autos decline of 0.3%. And if we excluded both autos and natural gas, we ended up actually with a rise of 0.3%. Now, that actually tells you a little bit of a story. It tells you that the decline in gas prices actually led to a decline in retail sales last month. Well, that number is a number that means retail sales other than gas and autos actually increased by the rate of 3.6% on an annualized basis. That's not what the Federal Reserve wants to see. The Federal Reserve wants to see this number negative across the board. And we're not getting that right now. We're getting positive numbers. And so now the expectation is that retail sales, excluding autos and gas, will be somewhere around 0.2% for Friday. That data comes out at 5:30 a.m. as well. But if that number misses hard, it's just going to be another exhausting argument that'll tell the Fed, hey, consumers are still spending money. They're still taking on more debt. Kind of ridiculous. Then you also have sentiment numbers coming out on Friday. And so this is always a weird one because consumer expectations for inflation have been trending down and sentiment has actually somewhat been trending up. The problem with that is when sentiment's trending up and people think inflation's going to go down, they ironically just keep spending because they think the recession is going to be transitory. And then that actually makes the recession less transitory, right? Because think about that logically for a moment. If people think the recession and inflation is transitory, because their inflation expectations are low, which they are. The 1-year inflation expectation Friday is expected to be 4.7%, and the 5 to 10 years expected to be 2.7%. Those are actually decently anchored expectations, just like what we're seeing in the market, measured by the 5-year break-evens. Inflation expectations are low. Excuse me. Well, if people have low expectations for inflation, and the market has low expectations for inflation a year to 2 years out, then they just tell themselves, okay, we just have to get through high inflation for the next couple of years. Let's just borrow more money. Let's keep spending and supporting our lifestyle. At the same time, they're creating that consistent demand that's actually creating the inflation and leading the inflation to be entrenched in the first place. Terrible. So you've really got just bad numbers everywhere. Now, to me, I just want to make this clear, and we've got a couple other numbers to talk about here too. I just want to be clear. That doesn't mean that it's time to escape the market. Like the time to do that was, the beginning of the year, not now in my opinion. Not financial advice, obviously, but I'm personally a big believer that, we're going to look back at some of these numbers and we're going to go, those were a lifetime of deals right there in the stock market. But then again, does that mean more pain can't happen? No, a lot more pain can happen. So, especially when we finally get to that capitulation. Anyway, building permits expected to come out on the 19th. So that's next week. Building permits, we actually expect to fall from let's see, the survey. Oh no, actually the survey is looking for a slight little push up in building permits. The prior building permits month over month was minus 10%. Now they actually think we'll have 0.5% growth. I doubt that, but we'll see. Building permits, though, are different from housing starts, and then, like, filing for a permit or getting a permit issued doesn't actually mean you're starting work on the project. And housing starts, in my opinion, is the number that we really want to pay attention to. That number is expected to come in with a month-over-month decline of 5.4%. That's a huge month-over-month decline. And, I mean, that just reiterates the pain we're seeing in the real estate market. Obviously, if you're an accredited investor, make sure to check out househack.com and join and get founder shares before the fundraise ends. As long as you join at the end of each month for the next few months, or by the end of the month for the next few months, you lock in the highest potential warrants for that month. They're kind of like free call options, but they're not call options. So just read the subscription agreement and the private placement memorandum at househack.com. So, those are the big catalysts that we have coming up. Remember, I will be streaming live at 11 a.m. for the minutes. Again, housing, maybe some insights, jobs, some insight. What are they seeing in their local markets? But we've had so much Fed speak. I'm not jumping up and down for anything really new here, but we'll see. Sometimes we get surprised. And then obviously tomorrow's CPI. So just go to metkevin.com/links and make sure you sign up as a reminder for both of those live streams. And if you watch this video after the minutes are done, well, then you can click that link to watch the minutes. All right, folks, thanks for watching. We'll see you in the next one. Goodbye.